Stream.
Hey,
Let's go.
let's do it.
Let's go. Well, and the old school radio DJs, I would think of those guys who would have to show up at the office at like 5 a.m. after waking up at 4 a.m. and they show up and they're like, "Welcome to the Wacky Wonder Wednesday." And there's no way they were hyped up at 5 a.m. So
They
they
sat in
talk.
traffic for like 45 minutes to get to the studio too. They're just angry.
Yeah, it's like Wacky Wednesday.
That's a bygone era for sure. You know?
It's so irrelevant now. I was thinking the other day about how supermodels used to be a thing. Do you remember when supermodels were a thing, like in the 90s?
Is this like before Instagram was invented?
Yeah. Well,
I'm just kidding.
like it was a big thing every year for the Victoria's Secret like angel show, and like it made ladies stars, or even before that, Sports Illustrated. It's just a bygone era to where the gatekeepers for that stuff were all gone, and those models are on Instagram, right? That the algorithm is determining that now.
Yep. Different world.
Yes. At some point you reach an age where I think all you do is just talk about the good old days. Hopefully I don't get there anytime soon.
Even though, the world keeps progressing forward, some things change for the better. And one of the things, Michael, that has changed in the last week, guess what? See this thing above my head that says sponsored by?
Yeah.
I noticed that the sponsor changed. What's up with that?
Our friends at OpenPhone have big news today.
They do. Do you want to share the news or do you want me to?
I think we need to continue our competition to see who could do the promotion of OpenPhone / Quo better. So do you think it gives you an advantage to go first, or should I go first?
I think you should go first.
Okay. Well, Chris, I'm not sure if you're aware, but today there is some huge news from our friends at OpenPhone. They are excited to share that OpenPhone has rebranded to Quo, QUO, and today they also announced $105 million in new funding to fuel rapid product innovation, customer growth, and sponsoring live streams like ours. And they're continuing to redefine the business phone category in the age of AI. Yeah, there's a lot more here, so I'll read it. OpenPhone Now Quo is the same powerful phone system, but with a new name. And if you're still running your business on a clunky old system, this is the perfect time to make the switch. Business owners know when you miss a call, you're not just missing a conversation, you're losing revenue. And Quo is the modern alternative designed to help you work smarter, build stronger relationships, and never miss an opportunity. With Quo, you get one flexible app on your phone or computer to run your business from anywhere. You can text clients, record calls, get AI summaries, and integrates with tools like HubSpot and Slack to streamline your workflows and automations. You can also have Quo's AI agent answer after hours so you never miss a lead again. And Quo is the #1 rated business phone system with 4.7 stars across 3,000 reviews on G2, and it's trusted by over 90,000 businesses. And today, Chris, I'm not sure if you're aware, but Quo is offering our listeners 20% off their first 6 months at quo.com/builders. That's QUO.com/builders. And if you have existing numbers with another service, Quo will port them over at no extra charge. Quo means no missed calls and no missed customers.
Amazing. I'm signing up.
This
is big. Wait, do you think the 105 million is 5 million of it going to sponsor this live stream, and then the 100 million is like operational, or is it 5 million is operational and then 100 million to sponsor live streams? I'm kind of confused, but that's a big number. It's a big number.
It is funny when you go into offices now and they have like one of those big clunky Cisco phone systems that doesn't integrate with people's phones, doesn't integrate with any kind of modern work stuff. And like it's crazy how much I think you can change your business by having like you have email, you have everything else, all works well with like the technical infrastructure of a business, and then you have your phone system that's like this orphan thing that just exists on its own. So I think this is great.
Yep. Proud to have them as our first and second sponsor. OpenPhone was our first sponsor. Quo is our second sponsor, all in one.
How much do you think they spent on the QUO domain name? Do you think they spent $1 million on that?
$500,000.
$500,000 would be your guess?
$500,000. Because it's like it's super short, pronounceable, but it's not like a hyper common word. I feel like so my only benchmark for this is I know that remix.com sold for $1 million, and that was like a few years ago. And I know some of these are weird because, like, I don't know, you could spend $2 million on a shorter domain. I would guess $500,000. But if somebody's like a domain expert and they want to guess, this would be like a funny, like, how many jelly beans are in the jar? Like we should all guess how much Quo spent on their domain, and then the closest person to it, the closest of our listeners, gets like a free month on Quo if they guess the number without going over.
My guess is it's over $1 million.
You think so?
Yeah. We got offered near.com, near.com, and they said they were expecting just shy of $1 million. And I think it sold for pretty close to that. So.
And you guys are what, higher with near or higher near?
Yeah, higher with near. Yeah. I think we have higher near too, but higher with near. And just as a bootstrap business, it's tough to spend $1 million on a domain name. That's where we're just like, what we have is pretty good.
Yeah. We're happy with this.
Yeah, we're happy with this. Ramin's here. All right.
Let's just let him in.
What's up, guys?
What's up,
man?
Yeah, it's great to see you guys.
Good to see you.
Who asked you to come on the live stream first? Was it me or Chris? I think I asked first, and then Chris asked.
I think it was you, and then Chris and I were just chatting randomly, and he was like, "Oh, I see that you're coming on." I was like, "Yeah, it'll be fun to hang out."
What I do is I follow up on all of Girdley's leads that don't accept immediately. And then I swoop in, and then I get credit for booking, even though he originally convinced you. So
that's kind of exactly what I imagined it would be.
I think you were like founding but hadn't launched WorkStreet. Your new company was the deal.
So. That's exactly right. Right. Although I'm very easy to convince, so you guys really didn't need both of you. One of you was more than enough.
Yeah.
So before I'm curious about WorkStreet and what you're up to, but before we do that, what is your guess on how much Quo spent for Quo.com? Quo's our sponsor, by the way. We're very thankful.
Great question. That's a pretty good domain. Either they got this for a steal, or I'm gonna like really under impress. I'd say like 25 grand.
Oh, you went way low.
Yeah. Well, my MO is like you throw out a really low number to like allow for people to have like a really good piece.
Well, we don't know. I said $500,000. Girdley thinks it's over $1 million.
Yeah.
For Quo.
Yeah.
Wow.
Yeah.
Okay.
3 and 4 letters are trading for a lot from what I've seen.
That's fair. Yeah, I'm not as strong at the domain marketplace, so that's fair.
Well, it's also super variable, because there are domains that I feel like should be not that expensive, and then I hear what people paid for them, and I'm like, wow, that is 25x what I would have paid for that.
The reason I went low is because I've heard, especially from like some friends recently, of like kind of these like 3-letter type domains that they're getting for a steal. The value of them is obviously like way higher, but they're getting them for a steal. But yeah, that's interesting.
Yep. So wait, how do you guys know each other, or have you guys met before?
Virtually, internet friends.
Yeah.
Internet BFFs.
Yeah,
nice.
For sure. Yeah. So, yeah, I think the same way you make friends on Twitter, right? Girdley writes interesting things. I don't know if I write interesting things, but his things are interesting. And so I'd reached out one time. I was like, hey, we should probably know each other. And we had a really good conversation. Actually, it was like about an hour or so.
Yeah, cool. I really enjoyed it.
Yeah.
So what's new, man? Like I think it's been almost 2 years since we talked. Like
a lot. Yeah. A lot is new. So yeah, I guess when we all caught up, and kind of typically what I write most about on the internet was my last business, Medicis, right? So we bootstrapped that business. We grew it to about 50 million in revenue, sold it to private equity. I stayed on board as CEO for a couple of years after. This year we'll probably do around 80 million or so. So the business has continued to progress really nicely. But about a year ago or so, and we did a couple acquisitions after the PE guys came in. So about a year ago or so, we said, let's bring in a new CEO kind of for the next, stage of the business. And we had been chatting about this for a couple of years. And so we got fortunate to find like a really great candidate. We brought him in July of last year, tested him out for about 6 months, did really great. So he's been internally running the company since the beginning of the year. And then we officially announced that to market kind of a couple months ago. And then in parallel, just like you guys have been investing a ton, have been kind of ideating on different, ideas or so. And so one idea that my buddy Sean and I, who you guys both know quite well, we went to Duke together, we got really excited about was building just like an AI native solutions business in cybersecurity, right? And so one of the lessons that I had gotten from Metasys was kind of in like, I'd say like a headwind, put your head into the wall kind of space, right? So like, Chris, you know this obviously from Lasky also with talent is, companies are hiring less and less. They're hiring different types of people, but they're hiring less and less. And you're constantly going up against, I think, like a very cost sensitive budget. Cybersecurity, on the other hand, is like you're going in the opposite direction, right? It's like one of the few things that are actually growing, huge tailwind. If anything, I think with AI, it actually like complicates cybersecurity significantly more. And so what we saw was, we said there's a pretty interesting opportunity to basically build something in this space that's only going to get more complicated with AI now. And then when we paired it by talking to a bunch of the companies we invested in, I talked to a bunch of heads of engineering, heads of product, et cetera. I was like, what keeps you up at night? Like, what do you hate about your job? And consistently across the board, it was security and compliance, right? And so we kind of latched on to, hey, here's this problem set or domain set where companies have to do it, right? Like if you're a serious company, you have to do it. You don't have a choice if you can be SOC 2 compliant, or now with AI, there's this new framework 42001. With AI agents soon, there'll be another framework. Like this is not a choice. You can't not do it. And the folks that have to do it internally are typically the product and the technology folks. They come to work because they want to build awesome products and like build cool companies. They don't come to work because they want to be secure and compliant. But it kind of falls onto their shoulders. And so we said, okay, if we can take kind of like a hyper growing market, like a very kind of burning pain point, and then think about the business just in an AI native way, right? And kind of like rethink from first principles how you would deliver on a business like this instead of with a human with AI. And a lot of the stuff we do is like AI and human in the loop. It can be really interesting. So we incubated it about like a year and a half ago. Business has really taken off. We're over 100 teammates today. And then, I've been kind of very actively involved with the team since day one, and then came in to actually, formally run it about 2 months ago. So we're having a lot of fun. It's been exciting.
Yeah, Jason Lemkin has this great thing that I've sent many, friends and companies that I've invested in over the year. I think he wrote it like 15 years ago, but I think it's still true today. He was like, look, you're going to get into an enterprise deal and you're going to lose your first deal. And it's going to be because of security review, because they can see right through you that you are like unprepared. You have no idea what you're doing. You've never done this before. And it's totally true. It's like, but it's also one of those things that like felt like a reality, but it's like, it doesn't have to be this way. Like there's so many companies now with new, go-to-market strategies who are capable of getting in front of like Fortune 500 teams, and then to lose like a $80,000 or $150,000 deal, which is, super impactful over something as, important, but at the end of the day, silly. Like if the product works and the service works, as like, going through and like, we don't have a CISO. Like that's just a question that all of my companies, would get asked from big companies. It's like, well, who's like your chief security officer? It's like, buddy, we are 8 guys in a room.
Exactly.
We can give you a name, but you're not going to be happy with that outcome. So I guess so one thing that's interesting here. So obviously you and Sean have, invested across, I don't know, dozens and dozens of companies together. I was looking back at a bunch of the ones that I think I'm in as well, like Boom and Deal, and there's some big names. I guess, how did you, what got you guys excited about this? Like you could be working on anything right now. I think I'm in a similar position of like, this choice paradox is very troubling when you can do anything and like any idea seems interesting as an investor, and like, dedicating a bunch of time to one thing. Like what got you specifically excited about security?
For sure. I mean, I think the honest answer is the way we thought about it at the outset was just like hyper opportunistic, right? We were like, hey, there's a market here. There's something interesting here. And kind of the initial thought process was, let's capitalize it and hire people to run it. And maybe we'll go do this like 10 more times. And we don't have to kind of like have the like chewing glass phenomenon of actually operating something day in and day out, but maybe we get the vast majority of benefit, right? And so the initial view was, it's a clear market opportunity. It's a clear segment. By kind of rethinking some of the, the operations or the mechanics from first principles, like there's a very clear opportunity here. I think as personally, as I got into it deeper and deeper, what I saw was, it was just like a very interesting blend of kind of my background and my networks in different ways that I hadn't quite had the opportunity to put 2 and 2 together before, like in any business I had been a part of. So what do I mean by that? What I mean by that is, Medisys was a services business, right? And we kind of scaled it to a really nice level. It was a pure play services business. So I had a knowledge of kind of like, how do you really build a good professional services organization? It was a PE style business versus a venture backed business. And right, I had the experience of selling to PE, but like this business is really a PE style, type business, both in the way you run it, the way you value it, kind of everything. And then our customer base is like startups, high growth technology companies, et cetera. And so like I had never sold to those folks or used kind of that leverage, right? When I was at Medisys, like we were selling into the enterprise, et cetera. And so it was just a really interesting kind of like Venn diagram of sorts of, well, I have this really great network now and we can kind of sell into them like really good service and a need that actually like fits. It is a PE style business. It's a services business and kind of have those experiences. And then the last piece is like, Sean and I talk about this a lot, and I talk about this with other friends a lot too, is like, where do you want to spend your time? Like Chris, you're going through this as well, right? Do you want to invest? Do you want to operate? Whatever it is. I'm fairly convinced right now that you can't be like a great investor if you're not just like, and there's different ways to do this, but you're not inside the guts of something and seeing how it's really unfolding right now. Because every day I feel like I come in and like we have a bunch of engineers, right? And we're not selling software, but we're building a bunch of our own internal software. And it's just radically like reshaping the way that you actually operate a business, right? Like from everything, right? Whether it's like from something as pedantic as collections, whether it's something as like interesting as how can we actually have our own internal tooling and pull these kind of like AI note taker transcripts of calls, and we can actually generate like better proposals, better solutions, et cetera, for customers. How can we build our own AI agents internally? I just don't think you can have like, if you want to invest, if you just all you want to do is you want to invest, I don't think you can be great at it or good at it if you don't really understand how companies are operating today. And I think if you're operating, it's like it's actually like it's a lot of fun to be building right now, right? Because it's just so new and so different. So I think the honest answer is that, like, it was definitely a bit opportunistic at the outset. I think we had a different thesis. Like maybe we'll follow in the great Girdley's footsteps and do a Holka, as we kind of landed on one idea, and then we were honest with ourselves. We were like, look, like I don't know if we got lucky. Like this idea is working, right? Like this business is working. It's a real business. It has real needs. Customers love us. We've hired a good team, et cetera. Let's see this one out, right? Like let's see this one out, and then we can see what's next or so. So cool. That's how we thought about it.
So what does a typical like customer engagement look like? Like who's the customer? Like how do they find you?
Yeah.
How do you sell to them? I'm just curious.
For sure. So the customer today, like the vast majority of the customer base is early stage startups, right? And like with AI, it's another piece too. Like some of our early stage startups are like 25 people, but they're like a 15 or $20 billion company. So it like changes the paradigm also of like what's possible. But vast majority of early stage startups are high growth companies. Who we started out selling to VP of product, head of engineering, CTO, maybe a CISO if they have one, et cetera. And the pitch was really just like squarely on security and compliance, right? And so the engagement could be something as simple as like, you need to get through SOC 2. You have probably bought some GRC platform. We can help you. The GRC platforms are great because they automate evidence collection, et cetera. So if you buy Vanta, like we're a big Vanta partner. If you buy Vanta's great because now if you go through an audit, you don't have to manually collect all this evidence, right? You get to connect your AWS instance, your Google Cloud instance. You can see what's red, yellow, green, but you don't really have somebody to help you like get through that way, right? So like if the Google Cloud connection is red, it's great that the product tells you that, but who's going to go do something about it, right? So there's like a clear gap in terms of somebody actually helping you along the way. So some of our engagements are very kind of like point solution, like we will help you get through this specific thing with SOC 2. If you're in healthcare, it's HIPAA or high trust. If you're going into Europe, it's ISO 27001. If you're with the government, it's CMMC. Like there's 30 different, these like security and compliance frameworks. So that's kind of like one bucket of how we can engage. The second bucket of how we can engage is we can do multiple of those things, for you, right? So we can do penetration testing, vulnerability management. Like it's not just about getting compliant, it's about staying compliant. And then the third piece is like we just run like a full security program for you, right? So instead of you guys internally doing it or hiring up for it, et cetera, you can just kind of leverage us to basically run it soup to nuts. The really interesting thing is like we started out selling to kind of those buckets or those folks that you mentioned, but what we've evolved to, and we kind of like landed on this like not in like an intentional way, but like it became a very real thing, was actually working with a lot of go-to-market leaders. And so the thing that we learned was exactly, Chris, the example that you mentioned, which is like you can sell security and compliance to the technical folks and help get, the technical pieces or like, the scaffolding kind of set and done. But the really interesting conversation is to have with the head of revenue is basically like, I don't know why my deals keep getting blocked by like security questionnaires, security reviews, et cetera. And so we said, okay, that's actually a really interesting solution for AI plus human in the loop, because most people think of it as, when they think of security questionnaires, they think like, this is the perfect use case for AI. I'm just going to have it write all my responses. I'm just going to maintain a bank. Like, why do I need anybody? Anybody that has sold into the Fortune 500 knows that it's like not about that at all. And it's about the pain of clicking through all these like janky old school portals in all sorts of different formats, trying to make like rhyme or reason out of how do you actually take all the answers and like maintain a really interesting bank and like get through questionnaires really fast. The other challenging part is just, heads of revenue are trained to operate on a quarterly basis. And so like you're ramping up all sorts of spiffs or discounts or end of quarter rebates or whatever that might be. Nobody is like appropriately staffed for when you want to run all those pieces as a go-to-market leader. How do you actually have the infrastructure to handle all the backend stuff that goes with deals? So we found this like really nice sweet spot with hypergrowth tech companies, specifically with GTM leaders. And that like solution or product is like really, really resonating, right? And it's a nice, I'd say it's like a nice proof point of the overall thesis, which is there's absolutely like AI that we've built, software we've built, et cetera, which helps. And I think it's the classic like, well, why do I use Ironclad versus ChatGPT for a contract? It's like you totally can use the public things. It's just like we have a better corpus and data set, right? Of like all these security questionnaires that we're doing for all of these companies. So we have like a fun fact internally that we say, which is if anybody wanted to sell, I won't say the name of the company, but let's say it's like a McDonald's or a Delta Airlines, right? I think we've done probably more security reviews for that company than like anybody else in the world. And so we have the posture of like, what is the security team at that company actually thinking about or looking for? And so it just starts to point like there's the AI piece on the answer, but there's the human piece on like how do you get through all the portals, and then there's the really interesting data set underneath on if a company proactively wants to go, and sell right to any of these types of companies, like what data set can we bring to the table to say, actually, if you want to get through the security review, right? Not in kind of like a cheat code way, but really in a like, this is genuinely what the company cares about on the other side. You need to think about kind of like this framing and such. So that's kind of like that's long-winded
cool
way of framing it, but it's a couple of different stakeholders and a couple kind of different pieces.
And so from a business category standpoint, this is very much a technology-enabled services business. Is that? I don't mean to minimize it. Like that's hard to do really well, but
I think that's the way to frame it. I think the really interesting thing now is like it really is starting to get a little blurry on like, are you a software company or a services company? And I think it's like more of our customers we're talking to are basically like, we want you to do the work, right? And like kind of how you do that doesn't really matter to us. I mean, it matters to us in terms of like your commercials and stuff have to be like market competitive. But ultimately, like what we really care about is we're bringing somebody in to do, X piece, like to solve X problem. And there's different ways to cut that, right? Like, I think the pure software vendors like to think that it's purely software. The old school consulting firms probably like to think it's pure professional services. I think this kind of like new hybrid, I think the 1.0 of tech enabled services was really kind of like higher margin consulting. I don't think there was actually like much technology. I think the new category of tech enabled services is really actually going to be like you internally build, a bunch of AI. Like it's truly a different way to deliver to the end problem. So yeah, like I think it's definitely tech enabled services. I just think the interesting thing that's going on right now is like the classic definition of tech enabled services is it's a different type of business. Yeah, for sure.
I have stomped all over Chris's opportunity to ask you a question, so I'll ask one more and then I'll shut up. In terms of growing the business from here, the limiting factor I would guess is people, right? And then at this point, and then eventually, do you hope that kind of flips to be more like as the tech grows inside the business, eventually tech becomes an unfair advantage for you guys and it starts to get more and more automated and you get those kind of benefits from that? Or how are you guys thinking about growing the business?
Yeah, I think that's exactly right. I mean, I think like for most services, the question is not like if if some of the pieces of the value chain or some of the pieces will get commoditized. I think it's more of when, right? And so I think what will likely happen is, like, I can foresee a world where 5 years from now, pricing on some of our engagements is maybe like 50 to 75% of the price, but the TAM is like 5x as big. And you have to have a delivery engine and a company structure where you can, still make the same percentage margin and just absorb that, maybe like the ticket price for an individual customer at different segments of the market, right? Like, this won't apply everywhere, but at certain segments of the market might be half of what they are today, but the market size is 5x or it's 10x.
Right.
And if you're not building the business in a way to basically, deal with that, I think what's like inevitability of the future, right? Versus like a hope certificate that doesn't happen. I think if you're building it in a way that's like a hope certificate that doesn't happen, you should probably build for like 18 to 24 months and then flip it, right? And get out. And that can be a strategy and approach. Like, we're trying to build this for the long haul. Like, we really have high conviction in it. If that's the case, then I think you have to be building in a way where you're constantly looking at the tech stack internally, the AI capability internally, and asking yourself the question, okay, if a analyst could do 10 projects today, how do we make sure that they can do 20 projects in a year and 50 projects a year from now? And maybe the model 3 years or 4 years from now is not even like they're doing 50 projects. It's they're getting promoted and they're managing 3 AI agents that are doing, XYZ, et cetera. Right. So I think that's where the 2.0 of tech-enabled services really comes in. Is like, I think the 1.0 was, hey, it's higher margin. Maybe we have some tech, et cetera. Now I think it's like, you fundamentally have to build like a technology company, because that pricing pressure, that change will absolutely come. And then that's where I think like market selection is really important. Like, part of why we're excited about this idea, or we have high conviction in it, is because everybody coding with Cursor and Lovable and all these, and Replit and all these products, it's incredible. It's also, it turns out, like, when you buy Salesforce, it's not because like the UX is like super sexy. It's because like the product is really airtight. Right. And so like, what's going to happen by definition is you're going to have all this code that gets written, all this software that gets created, et cetera. And it's just going to create compounding security challenges. And there's like an amazing part of it, which is like the whole economy is moving online and ultra leverage. And there's a downside of it, which is like you have a bunch more security and compliance issues. Like, there's not even a framework right now for how do you, if an enterprise wanted to, if you were selling AI agents to the enterprise, in the same way SOC 2 is there for like B2B companies in terms of storing data, et cetera, right? I'd say you're on the cutting edge right now if you're doing 42001, which is like the AI framework. Forget about the AI agent framework. So I think this continues to compound, right? Where as every company became a B2B software company, you had to get SOC 2 compliant. I don't know how you're a company now that's selling to enterprises or like businesses and you're not SOC 2 compliant, right? Like, everybody's storing people's data now. I think the same thing is going to happen with AI models. The same thing is going to happen with AI agents, right? And so you have to build it, I think, in a way in which you're kind of just betting on this idea of TAM like exponentially explodes. ACV in certain segments might go down, but with the right ICP, like ACV actually should shoot up, right? Because you should actually be doing like multiple frameworks, more security questionnaires, pen testing. Like, you should be doing a lot more things, right, for an individual customer.
The genius of this idea that I love is these startups have a ton of money, but they neither have the time nor the expertise to do security. And they're just like, just do it for me. Just take care of this so we can keep growing faster. Unlike, say, like your Russell 5000, right? Who are just like, okay, we're valuing you against whether we're going to hire or do it ourselves. And these guys just don't have time for it. Okay.
Yeah, they don't have time for it. Yeah, no, you're totally right. Like, I think it's two pieces. I think one is they don't have time for it. I think the other piece is they don't know what to do about it, right? To your point around like the expertise piece. And the third point, which I think is actually like really exciting, is it's just a burning pain point problem. Like, nobody comes and is like, help me understand. Like, if you were thinking of traditional tech-enabled services, how do you sell, right? You walk in with your little like consulting deck. You tell everybody about your case studies. You walk them through. You send the deck afterwards, et cetera. Most of our customers are like, dude, I needed SOC 2 yesterday. Like, how do we get started here? Right? It's a totally different engagement model, right? And then if you do really good work for them, right, the relationship is actually, it's kind of engendered in a different way, which is, you came through for me at a really important time for a really critical inflection point in my business, right? And you have done this for a bunch of other companies. If you are telling me I need to do A, B, and C, I'm going to have a higher likelihood to trust you. So the relationship is also not you're like a project vendor, right? Like you're a vendor and I'm giving you a project to do. For some of our customers, like it's like that. Like I'd like to change that for all of our customers, but for a lot of our customers, it is like you came in at this critical moment in time, you delivered this really important piece of work, right? Not just you did a good job, but like for our business, it was an inflection point or transformational piece. Now you're telling me I should be thinking about A, B, C, D around the corner, and I didn't even know about SOC 2 6 months ago. And so like I should probably trust you that A, B, C, and D are coming, right? Like the next audit is coming, the next piece is coming, and it's totally true, right? Like if you're SOC 2 type 2, for example, if you're SOC 2 type 1, right, which like nobody accepts, you get the report and you get to just call it a day. If you're SOC 2 type 2, they're like, here's the report, but in 6 months, we're going to test you again. And we're going to make sure everything, like all your security controls are not static in one point in time, like they're ongoing, right? And so there is this interesting kind of customer relationship that's emerging from this business, which is people really trust you and they look at you as your ongoing partner, which obviously like for retention is interesting, for expansion is interesting, right, et cetera. I think for value, it's interesting. You can't retain anybody in any business if you're not continually providing value, right? And I think a lot of agencies, consulting firms, it's kind of like, I do the project and there's nothing else to be done, right?
Yep.
So that's been an interesting piece to see, in this business as well.
And how did you guys think through in the early days, sort of the formation and capitalization structure of this business? Because I think like 10 years ago, right, there was probably like two pretty obvious ways that you would do something like this. You would either like bootstrap and it would just be like a long bootstrap business that you would then exit to PE, or it would be like, we're going to go raise a $2 million seed and we're off to play the venture game. And now I think that there's like all these really weird ways that these businesses can get built. And I think that like, in many ways, the inevitable success of some of these businesses, the early like capitalization decisions actually matter a lot to the outcomes of like, is this a $100 million or $200 million exit, but you've raised $100 million of venture? Very different than if you're doing some sort of like AI roll up where you're actually like buying security firms eventually, and then you're sort of like helping to sort of enable them on your product. I guess like what's sort of exciting to you about like the future of expansion and sort of like how you guys originally thought through the, structurally like how the cap table should look for this company?
For sure. Yeah. So one of the ways we thought about it, so like my background, funny enough, even though I've invested in a bunch of startups now, is I've never raised venture personally, right? Like my background was running and like scaling a bootstrap business, right? Yeah. So it's kind of like, from my vantage point, it's kind of all I knew, which was, hey, it's kind of weird. Like you got to make money from day one. And I don't say that pithily. I actually say that as like, there are very like clear businesses where that is not the case and that doesn't make any sense. And then there's a whole heck of a lot of businesses where like that absolutely makes sense. I think the convergence and the change. So one is we had alignment around like, let's capitalize this business, right? We had both had exits. We had the wherewithal to capitalize it, et cetera, right? So that was one piece. And that was important day one, because day one, the conviction was, hey, this seems like a good idea, but we don't actually know yet, right? Like we don't know what we don't know. And so let's have max flexibility also for, what type of business this actually, translates to be. And then on that basis, we can kind of evaluate future cap table and future capitalization, but starting out by bootstrapping and putting enough commitment behind the business that it could really go, right? And I think the challenge often with bootstrapping is like, you're kind of 1 foot in, 1 foot out. So like, I think the first decision you have to make is like, let's really make a go at it, right? And like give the business enough capital that it can really give a go at it. But then after that, yeah, I think like the hybrid options are like really interesting now, right? We're at the scale we're at now, we're like never going to be on the venture path. We could totally be on the PE path. We could totally be on a one and done round type path, right? The AI roll up thing is really interesting. I personally, like having done a bunch of lower middle market M&A, I think the AI roll up concept is going to be like Thrasio in 3 years. I think it's like, sounds like a great idea and everybody is getting really excited about it. And I think 3 years from now, we're going to be like, wow, a lot of money was burned, right? Trying to do this idea that like sounded really good and wasn't. And I think it actually boils down, like not to go off too like big of a rabbit hole, but I think it ties back to the capitalization piece. Is it just goes to like a fundamental economics point, right? Which is, if you go and buy, let's say 2 or 3 million of EBITDA at 4 or 5 times, right? Like the real question you have to ask yourself is like, can I take $8 to $15 million and generate that 2 to 3 million of EBITDA myself, right? And it's easier said than done in a lot of situations. But in other situations, it's actually like, it'd kind of be crazy that it would take you $15 million to generate 3 million of EBITDA.
Right.
And by the way, like, have fun with all the cultural changes, and tearing something down and building it back up is twice the work. Right.
Mm-hmm.
And so the question that we had always asked ourselves was like, maybe roll up, or maybe, M&A, et cetera, is something that's in the toolkit, but not until we're at a scale where we're really like, this is making, kind of like a big, meaningful dent in the business. And then I think it's also, you're not just buying EBITDA, like you're buying a new market, you're buying a new capability set, whatever that might be. Because up until you have a point where you have an organic engine where you can really put $1 in and you can get X dollars out, like, you better be really sure that if you wanted to buy 2 million of EBITDA and you were going to spend 10 million bucks on it, if you spend $10 million on your own business, like, how much more could you generate? Right. And so yeah, I think coming back to the original point, the capitalization piece is really interesting. We thought about it kind of day one as, let's just bootstrap it, right? Let's put enough into the business to get it off the ground, really grow it, et cetera. And then now that it's got like real legs, et cetera, I think like future capitalization is absolutely something to think about. It's a real business. It's growing at a real clip. But it's never going to be the traditional venture pathway, because I think, to your point, Chris, also is, and I saw this from, like my personal experience, like, you can do really well with a $50 million exit, right? Or $100 million exit, but you better protect the cap table like crazy, right? And it's a whole heck of a lot better of an outcome of a lot of friends that I've had that have exited for $500 million, right? But the cap table was all messed up, right?
Yep.
So I think these types of businesses with AI and stuff now too is like, you can really, like, you really don't need a ton of capital to get started. And I think if you have that DNA from day one, you can run a pretty capital efficient business and, like, grow pretty well. I think the question you have to ask yourself is, if it's such an obvious opportunity to grab market leadership and you have a really good use of the capital, right? Maybe go raise. But otherwise, I think, like, you can grow these businesses really nicely, right, without raising a ton, right, or even putting in a ton.
Yeah, it's not a perfect parallel, but when you kind of described the early version of this, it reminded me a bit of what like John Swanson has done at Athena around like personal assistants and chiefs of staff. And I think it's like, I mean, he's built a monster business, I believe, pretty much bootstrapped by sort of taking Thumbtack money and sort of, incubating this and then bringing on a CEO and sort of running it as chairman. But I mean, like, it's he's basically gotten to close to, what was acceptable as like venture scale in 2020 before the world went crazy for the second time. But like, going from $0 to $100 million in revenue on a bootstrap business in 6 years is absolutely incredible. And I think that like he has used this thing of like, every CEO needs a VA and VAs need to be trained better, and they need AI to sort of, do this task management and project management. It just seems like, there's some differences, but there's a lot of kind of similar paths that this business might see.
It's also like the partner you choose for capitalization is so important, right? So there's like that clip going around Twitter right now of like Hemant talking to Harry Sevings of like, like, whatever, triple, double is like just not interesting anymore. And you have to go from 0 to 15 to 100 in 2 years. And, I think like most of the world reacted to that as like, this is toxic venture capitalism. And there's, I think like there's two parts that are true to that statement. One part is like, well, I guess if you have $40 billion under management and you really need to move the needle, you probably do need insane outcomes. And it can also be very true that you can run a 20 million, 50 million, $100 million business and have a tightly protected cap table and do it over 7 years. And it's generational wealth for you and your family, right? And like both things can be true. I think what's not true, or what becomes really challenging, is you don't have clarity of thought around what are you trying to build and like what is the outcome here, and then just capitalizing it all wrong, right? And that, like, that's the mistake. I think a lot of people make the mistake around, succeeding itself is like really, really challenging. Like getting an acquisition done itself is really difficult. I think if you pull away from Twitter land, you see that like, man, if you could get like a $20 million acquisition done, like it turns out like it's a really freaking hard, right, to do. And if you own at least half of it or like a meaningful amount or so, like that's a lot of money, right? Like objectively, right? We get kind of like wrapped into this like Twitter mindstorm where it seems like hundreds of millions of dollars is just like falling off of trees for everyone to collect. But you can make really, really great personal outcomes and really great businesses that are not, Tesla or, you know, XAI or like world changing or so. You just have to know that like that's what you're in it for, right? And then you have to, I think you have to be flexible enough in your thought process every 2 or 3 years. Like if this company absolutely exploded at some point in time, like maybe 2 years from now, the vantage point would be like, yeah, actually everything I said 2 years ago was completely wrong, because there's a clear use of capital. There's a clear math you can do of, if I dilute myself by X, it is really worth more than X. But if you don't have the clarity of thought around it, I think you either just absorb into, you know, like toxic VCism or like service. I always used to love the like, and I got this all the time with like friends, certainly from tech in my last business, which was until I think like the world went crazy and people's options were worth nothing, and they were like, yeah, actually cash flow is nice. It was kind of like, why are you doing that? Like, I don't get, like, it's not ambitious, it's not interesting, like it's just like not a good use of your like intellect, talent, etc. And you know, now that like the world has kind of caught on a little bit of like, you know, actually you can do quite well doing this. It's funny to see a little bit of the cultural, you know, shift as well.
Yep. Yeah. Business, the actually making money thing goes in and out of style, but you know, it
very much so does. It very much so does. Yeah.
One thing that I thought was really interesting that you touched on, that I was curious, you know, kind of tying security to revenue, I think is really, really interesting. I was curious, like, do you guys have a way, you know, for like future customers that are listening to this, like, are you thinking about like sort of truly closing the loop? Like you mentioned, there's this one big company, let's say McDonald's, and like you have really great visibility now into, you know, their security process and what they look for when selecting partners and vendors. Like, are you guys thinking about or doing like CRM level integration? Is that sort of, you know, anecdotally just getting tracked back to you guys from the head of revenue right now? I guess, like, how are you thinking about like, you know, what did we do from a security and compliance perspective? You know, was the deal actually won? If it was lost, did it have something to do with their security process? Like, how do we actually get better over time by like selling to bigger and bigger companies?
Totally. Yeah. So it's absolutely, like, if there was a spectrum of qualitative to quantitative, it like absolutely leans to qualitative right now. Right. But the idea is, so, you know, what are the qualitative measures, right? The qualitative measures are basically like, our AEs that are working with us having really good experience? Are they telling their CRO, like, this is saving me, you know, time, energy, I can spend more time with the prospect on discovery, whatever it might be, versus, you know, admin backend work, right? On deal velocity, right? If we're turning around questionnaires within 24 hours or so, right? Are we able to see at least like in the value chain of the deal, like some machination of basically like when Workstreet got involved, our security reviews, our internal process went from a week to, let's say, a day. And then, you know, when we got back security review red lines from the customer, we're getting 50% of the red lines, 25% of the red lines. And so there's a save on time on the front end. There's a save on time in kind of like the contracting process, right? I think red lines is like one component. I think like clarification questions, it's a nuance, but that's another component, which is, are we getting less red lines, but are we also getting less follow-up, right? In terms of the responses, and making sure that like, yeah, these responses are in accordance. So we're tracking it very qualitatively right now in that sense. And we just have kind of like the case studies and like the real life experience with people on the ground, which is, hey, the data set's not like massive, but the experience is very real. And then I think over a period of time, as the customer base scales, that translates into like very definitive statements of saying, look, across, you know, a representative set of 100 Series B companies in healthcare, right? We are making the security review fast, like process, you know, we are dropping 2 weeks off of, you know, the representative AE. We are making deal velocity 3 weeks faster, right? And I think it ultimately goes to a like unblocking revenue metric, which we think is the North Star, is can we basically say, look, we are unblocking X $100 million of ARR per month for our customer base. And can we kind of track that up into the right, right? And I think if we can basically like make a statement eventually to go to market leaders that, yeah, every month Workstreet is unblocking $1 billion of ARR, like that's really popular. That's like really, really interesting. And then I think if you break that down into like, okay, well, how are you unblocking the billion of ARR? It's, you know, faster, you know, AEs are spending more time with the actual prospect, right? Like security reviews are coming back with less red lines. Security reviews are coming back with less clarifications, right? Actually, your answer, which is going to be the, you know, the most difficult one, but you're like, your answer, forget clarifications, red lines, etc. Like your answer is actually a better answer than you would have answered it without us in the room. Like, we have to figure out how to measure that. But I think these are all kind of like individual metrics that kind of tie to that North Star piece. And if we can make that statement like very definitive, I think that'll be kind of like the nirvana that we crack. The good news is when I talk to GTM leaders that are like in hypergrowth companies, whether it's PE or venture, I start telling them what we're doing and they kind of like finish the pitch for me. And so it's one of those things that I think it kind of goes back to like Girdley's point at the outset, which was the pain is just so real for the like appropriate stakeholder that they almost don't even need the proof point of like, here are the quantitative things. It's kind of like if you're a seasoned GTM leader, like, you know, you're getting slowed down at the end of quarter, you know, you're getting red lines back. Like you just intrinsically know it, even if you can't put your thumb exactly on like, what is the exact ROI, that it's enough to make the sale. But I think in the aggregate or, extrapolate it out, taking a step back, it's going to be super interesting to be able to provide like an aggregated data set. That, then you can even do interesting things on top of, right? Like you can query, you can proactively target customers that are selling to a McDonald's, whatever that might be. And the pitch now is not even, hey, the ROI is better. The pitch is basically, and we do get this asked from a lot of customers, which is kind of like what we think we're doing for a lot of them, but like working towards like every single day is just, hey, tell me what CISOs of my customers like really care about. Like just educate me on what, like, because it fundamentally comes from a place of like, I want to get the deal done. And if you can just tell me the answer key, like, I'm not going to cheat it. I will literally go do all those things. But rather than being in this black box of like, I think you care about this. Do you care about that? Like, are you asking the question this way? Like, just tell me, McDonald's, that you care about security in this way, and I will go do all of that stuff, right? Which, by the way, for us is great because then we're like, let us do all of that stuff for you instead of you doing it, right? So I think there's like a close the loop kind of element as well. But yeah, I think if we can get to that kind of North Star, this becomes like the pitch is like really, really powerful.
How did you guys make the shift? Like, you told me the story of making the shift from trying to sell the product owner and CIO, CTO at these startups to like figuring out you should go talk to the revenue owners instead. Yeah. Like, how did that happen?
It was very accidental. We had two customers that were basically, they pulled us in with their GTM leader. And they were like, great, we're doing all the compliance work, et cetera. But, I keep getting these questions on our security and compliance posture, from the GTM leader. And so then we said, okay, that's interesting. Like, why are they asking you questions? What are they trying to learn, et cetera? We kind of went back and forth. And then at one point we said, look, can we, like, I'd just love to talk to the GTM leader, right? Instead of getting kind of the game of telephone. And then I talked to that GTM leader. We talked to another GTM leader, and we just talked to like 5 or 10. And we were like, there's like very clear, it's like, Chris, what you and I used to talk about like in the very early days of Lasky, right? Like when you would ask me like, what are your impressions on these different VMS systems or X or Y or so? It was just good discovery, right? Like we kind of landed on it luckily, but then after that, it was very intentional discovery. And then once we figured out, okay, this is the language of the GTM leader, this is the specific use case from a security perspective. Can we solve it? And once we had conviction, like we could solve it, and we solved it for a couple of our customers, we said, this is super repeatable, right, for that company. Yeah. So I think that's like, it's classic kind of early stage 101 startup piece is you just have to keep your ears really perked and stay really, really close to the customer and not listen to what they're asking you to do, but rather you're observing like their behavior and what they actually need. Right. Yep. And then you're able to kind of figure that out.
Yeah. Super smart.
Yeah.
That's awesome. And are you, I guess last question, and then we'll wrap. Are you still angel investing? And I guess what gets you excited in terms of ideas that, are out there that you're hearing about, or spaces that are sort of exciting from more of an investor lens?
Totally. That was the other part of this like original story, which both like Sean and I were kind of like, we're like, let's like run a company instead of angel invest a ton, because for me, the frustrating part of angel investing, especially if you're not like a full-fledged VC just doing it all day, every day, is you don't get investor updates actually from like 80% of the people you invest in. You have no clue what's going on. And, maybe you make an introduction here, you have a good session there, et cetera. But like, do you really impact like what's going on the ground level? Like, I'm not so sure. And so my original thesis in angel investing was like, hey, I'll learn about a ton of business models. I'll meet a bunch of interesting founders. And I think there was like truism to both of those, but I think it's like a pretty expensive way to like learn that lesson versus not. And so angel investing a lot less, either just deploying money with funds and saying, okay, like you are in the business of doing X, and I'll kind of like live the portfolio and live the interesting companies kind of through that. and been much more focused on just kind of operating, this one individual business right now. But from a Spaces perspective, I mean, I'm particularly just interested in this like AI services. I hesitate to say it because it's become a little bit of like groupthink amongst the venture community of like services as a software. But I do think that's just like very real, right? Yeah. Like I think it's very, very real. And I think if you're in the position to actually do the work, the part of what I'll say about these AI rollups that I do think is interesting is, I think it's a lot harder to build software and then go and try and sell it. I think it's a lot more attractive to say, I actually have the customer relationship and I can like AIify or techify this. So I do have some empathy towards the route of like, why go the AI rollup route? I think the culture part and like the deal mechanics part is like a totally different skill set and really, really hard. But I do think there is a truism to basically, if you have the relationship and you can understand like the actual workflows and stuff, you can build AI around it, you can build software around it, et cetera. I think this is going to be like the fundamental, just like biggest shift from an economy, GDP, everything, like labor markets, et cetera, perspective. Because, services is like a multi-trillion-dollar space, yep. Right? And like software is, 100 billion or like a low digit, trillion, whatever the market size is space, it's materially smaller than services, right? Yep. So I get like most excited right now, partly because of what we're doing at WorkStreet, but also because of my background and like where I feel like I can see the difference of just companies that are taking traditional services business and they're like, if we rethought this from first principles, what is this business? What does this business actually look like, right? Yeah. How does labor look? How do AI agents look? Like and then I think the chronology and the sequencing is super important. Like I think that kind of like, we're just going to make a bunch of AI agents today and that's the business. Like that absolutely doesn't work. But I think the traditional limiting factors around services businesses scaling, which is we just need lots more people. I think if you're building the business that way today, you're off. I think certainly if you're expecting the business 3 to 5 years from now that way, you're going to be way off, right? And so it's also kind of finding the sequencing of like, when can you truly bring AI agents in, technology in, and kind of like, how do you keep mapping that, with your people? So yeah, I think like generally areas where it's a services business, but you can really, infuse AI into it. And where I just think like AI is going to create more complicated situations, like security is a perfect example of that, are also super interesting, right? I think there's some areas where it's literally, we're going to look 10 years from now and we're going to be like, why did any services company need to exist? That doesn't make sense. And then I think we're going to look at other businesses where like, geez, like you definitely need human in the loop, and it's like way more complicated, than we thought it was.
Yep, totally. And I guess if people want to follow you, get in touch, use WorkStreet, what are the best ways?
Yeah, so you can go to workstreet.com and kind of if you have any issues around security or compliance or so, we'd love to help. So definitely go to workstreet.com. I'd taken like a break from Twitter for a long time, but I'd written on it for a long time. That's how I met you guys also. I'm trying to get back into that. And then, a lot of our buyers, it's a little bit cringe, but like a lot of our buyers are on LinkedIn. And so I'm starting to write on LinkedIn, et cetera, as well, because just good like business buyers are there as well. So yeah, but our site is definitely the best, the best place. Or of course, like if anybody that's listening has questions around stuff, like DM me and we'd love to help.
Cool. Awesome.
It's not a little bit cringe on LinkedIn. It's really cringe and it's totally worth it. So super smart.
It's totally worth it. Exactly.
I mainly just hate LinkedIn because we get like right now, I think we have 2 people tuning in via LinkedIn and 4,000 on X. It's so imbalanced. LinkedIn needs to figure out this live stream thing.
Somebody put it really well to me where they were like, if you really want to be transactional and commercial, like LinkedIn is absolutely the platform. If you want to meet like the most interesting people in the world, like X is the platform. And I think that's like the right summation actually of like how to think about platforms, right? They have their different use cases.
For sure. Well, cool. Thanks so much for being here. WorkStreet is awesome. Can't wait to see it grow over the coming years. And we'll have you back in 6 months to give some updates.
From your G5, you can live stream in while you're flying to San
He's actually on a jet right now. He just sets that as the background, so we
exactly.
That's in our sad little offices.
That's the play. Exactly. No, awesome guys. Thanks for having me on.
Thanks
for being back on. Good to see you guys as always.
It's so sick. See you. Oh, he's our first guest to actually beat me to the click.
No, I did it.
Oh, you did?
I was
You're
hovering,
so good. You're
so we
so
didn't have the
good.
linger.
You're so
Every
talented.
week we get a little bit better,
Yeah.
1% better every week.
How do you like our new layout and stuff of like the overlay?
It's great. I
Do you
like it
wanna know why it looks so good?
because
I
you did
sicked my
it.
chief of staff on
Yeah,
it.
because you
She
didn't
did.
do it.
I was like, "Hey, please go fix this." That was the message. "Please go fix this.
Please fix.
Please fix things."
Yeah.
With no vowels. PLS space THX.
Yes. I used to have a please fix mug, and like somebody was selling them during COVID, and I bought one, and then after like 2 years, it started to fade, so I tossed it. But it was a good mug. So
So I do have one thought for you,
yeah,
inspired by Ramin, which is, I think as you're working on your next thing, I think there's really something to this, like find a bootstrappable business, low capex. You don't have to get on the VC treadmill, which I mean, frankly, like you lose control when you
Mhm.
get to that situation. And that was the most inspiring thing about what Ramin was talking about, which was like he controls his own destiny at this point, and like he doesn't have to be thinking about how he's gonna, trudge up and down Sand Hill Road or whatever the equivalent is in downtown San Francisco now to like raise money. And I think for folks at your stage in life, there's something to be said for that, right?
Mhm.
Like that, just you can control your quality of life, and it's just, I think there's a lot to be said for it. Um, so
Yeah.
I've gone down both paths, and as I look back at what's more rewarding right now, it's the stuff where I have control and ownership over scale and whatever comes with raising money.
I agree, and I think a lot of the people that I am very inspired by from an entrepreneur perspective, like have bootstrapped and sort of built their own companies with very little or zero outside capital. So it's definitely a model that I admire and like. And from owning a couple of these things that have grown pretty nicely without VC money, it's like, oh, this is interesting. Like you can still like
Yeah.
if you pick the right business, the cash flows, the world is your oyster in terms of like how much you're reinvesting back into the business. And there's all sorts of other ways of sort of doing things, but I think customer funded businesses are fun after running on the VC treadmill at like 100 miles an hour for a decade.
And what's the name of your ghostwriting business you're involved in again?
It's Napa, so use napa.com. Yeah, I mean, we've built it with a tiny team of like 2 full-time employees and a ton of contractors to like
Yeah.
a couple million in revenue in a year and a half. And so it's like, all right, there's probably more of those out there, and trying to go find them right now. So
I think that's great. Well, and if you can, I mean, you suddenly just string together, those things are going to have a hard time scaling past 2 or 3 million in revenue, but they do it all at 30-40% net margins.
yep,
Like that's a pretty good life, right? And
yep.
that's what we're doing with my media stuff too. Like, it's like, and that's a lot of money. Like I think
Totally.
Ramin was exactly right about that. People on Twitter are like, oh, $1 million a year, whatever. Like that's a lot of money. Like that's a lot of money.
If you build one $3 million a year business with 30 or 40% margins, you've made it. And if you can find a way to do 5 or 10, you've super made it. And
Yeah.
so that's pretty exciting.
Yeah. Well, I mean, those phases there, like step one is like you can delete your LinkedIn at step one. Step two is you can delete your X,
Mhm.
like your X account. Like that's what we're looking at. So,
Right.
so I got to run because we're going to the airport,
Yep.
but I would be interested in your entry in the open phone pitch.
Yeah.
I give myself an 11 out of 10, mostly because of my enthusiasm.
Yeah.
So I'm curious if you can outdo it for Quo. I'm sorry, not open phone, Quo.
Well, hey, I've never heard of Open Phone, but I do have somebody that you should hear about, which is Quo. And actually, as you're heading out the door, this is going to be super quick, but I have some big news today from our friends over at Open Phone, and they have rebranded to Quo. And today they've also announced 105 million in new funding to fuel rapid expansion and innovation in their customer growth as they continue redefining the business phone category in the age of AI. So Open Phone, which is now Quo, is the same powerful phone system, but with a new name. So if you're still running your business on a clunky old system, this is the perfect time to make the switch. You out there are business owners, or you want to be business owners, and when you miss a call, you're not just missing a conversation, you're losing revenue. So Quo is the modern alternative. It's designed to help you work smarter, build stronger relationships, and never miss an opportunity. With Quo, you get one flexible app on your phone or computer to run your business from anywhere. You can text clients, record calls, get AI summaries, and it integrates with tools like HubSpot and Slack. You can also have Quo's AI agent answer after hours so you never miss a lead again. Quo is do you think it's the number 3 rated? Is it the number 5 rated? 10th rated? It's actually the number 1 rated business phone system with 4.7 stars across 3,000 reviews on G2. And it's trusted by over 90,001 businesses. I increased it to 90,001 because I'm sure somebody has added Quo because it's so amazing because of this live stream. And so Quo is offering our listeners 20% off of your first 6 months at quo.com/builders. That's quo.com/builders. And if you have an existing number with another service, Quo will port it over at no extra charge. Quo, no missed calls, no missed customers. Do it. Like and subscribe.
Like and subscribe. Click the notification bell. I'll give you a 12 out of 10.
Oh, pretty good.
That was amazing. You win today.
Okay.
You win today.
Hey, but combined, see, this is the 1 + 1 = 3, is that combined we earned 23 out of 20 points between the two of us. That's pretty good.
All right, man. Fun as always. My wife just texted me that I need to wrap up. So, so if anybody's with us, we will be back. Not next week. We're going to take a week off, and we'll be back the week after that. And we have some good guests coming up. I was dealing with Mitchell Baldridge, getting him scheduled. So should be some fun folks. And man, like every time we do one of these, like I'm just shocked by what kind of like conversations with somebody like Ramin like open up my eyes to. Like
Fun.
Even if nobody watched, I would be doing this because I feel like I learned so much in every conversation.
Totally. Yep. And hopefully there's one person out of the 5,000 listening to this that also finds it valuable. DM us if you find it valuable. What do you want to hear? Who do you want to have on? Help us fill our guest list, because that is like one of the hardest things about this is booking guests.
It's a pain.
Yeah.
So, but yeah, maybe Quo will continue sponsoring. We can afford a booker. That's what we need, a producer. Yeah. So we'll get there.
Sign up for Quo so we can get a booker.
Yeah, go shop at Quo because we need more money. All right, everybody. We'll see you later.
Later.